Hello and welcome to the Monday Futures Market Outlook for July 16th, 2012. This is Patrick Srezna. For those of you that have not had the opportunity to try out eMiniSource.com's trading room, 5-day complimentary memberships are available on the website. As always, we start off with a chart of the U.S. dollar index futures, and we have the U.S. dollar remaining clearly in an uptrend and still targeting our upside targets. We remain relatively bullish the U.S. dollar, looking for a rally to go even as high as 85, 85.50 on the upside on the short term, and even if there is a squeeze to even go as high as 87 on the upside. While in the bigger picture, at some point in the third quarter, we are likely to see a high in the U.S. dollar that will subsequently create a reversal. We don't think it's here off these levels, so we're still anticipating further strength to continue. Next here, I want to take a look at the Euro FX futures, and the Euro continues to be predominantly in a downtrend. We're going to be watching over the next day or two to see whether the Euro can muster up a break of this 122 level down below to open the window for that drop to finish the move down to 118 to 120. If for whatever reason the Euro gets a little bit of an oversold bounce here, we could see temporary rallies up to 123.50 to 124.50 on the upside. But nonetheless, we're going to watch to see which way the trend breaks here, but we are predominantly bearish and remain that in our bigger picture. Next year, I want to take a look at the 30-year Treasury bonds, and the Treasury bonds continue to strengthen up into the 152 to 153 zone on the upside. At some juncture here, as the bonds break to new highs, we could see these Treasury bonds even rally to 156 or 158 on the upside. In the bigger picture, we remain bullish the bond market as long as the U.S. dollar remains relatively strong, and a lot of fear is being associated with being in European assets. In the bigger picture, at some point, more than likely we're at some point going to see a major high in these Treasury bonds, but it is likely not coming off this level. I mean, there is a remote chance here that we double top off of the 152 level, but I don't give that a lot of validity. It's more than likely to hear that Treasury bonds will still make the break and move higher. Next year, I want to take a look at copper futures, and copper continues to kind of zigzag, consolidate after a very weak month of May. Really, at this stage, we could even see a short-term burst on copper all the way up to 360 on the upside, but we fully expect copper to still weaken again, not only back down to the 320 level where the lows came in back in May, but rather we can see even $3 on the downside during another sell cycle. Next year, I want to take a look at crude oil, and crude oil as well is sort of consolidating off of a very extremely oversold market state where during the months of May and June, it wiped out $30 on the downside. This type of a consolidation could even last many more weeks, and we could even see temporary rallies even as high as the $92, $93 level. Unlikely that we'll see 95 again, but as crude oil kind of bangs this out, eventually we're going to have crude oil come and retest the lows at minimum, but there is potential for us to break even to 70 or lower during another major sell cycle, but it is likely that a sell cycle in crude oil may not start even this week, so we're anticipating to see some further strengthening into these consolidation points. Next year, I want to take a look at gold futures, and gold continues to be stuck in a very sideways range-bound zone between basically 1550 to 1650. Really, we came down and tested the bottom end of that support and very quickly found our way right back to the top and then back to the bottom. This sideways chop continues to be dominant. We still are open to the idea that gold has one more weakening cycle to go, more than likely down to the 1440 to 1460 area on the downside, and before we really bang out the bottoms for the year and potentially have a room for a much bigger rally in gold. So when we take a look at the S&P 500, I always start with a weekly chart with an 80-week moving average on there, which has depicted every bull and bear market cycle that the market has gone through. We currently remain above the 80-week moving average in an uptrend, primarily why we remain neutral in terms of U.S. equities. But one thing that this chart doesn't show is that the majority of global equities are very distinctly in a bear market. So the U.S. market is really moving in its own isolation, independent of those global indices, which are all very deeply embedded into in a deep bear market move downwards. So when we take a look at the daily chart on the S&P 500 futures, you can see here we got a little bit of a bounce off of an oversold state on Friday. There is always the chance here that the market is going to even potentially come and retest those highs. We could see even a short-term rally to 1365 or even 1375 on the upside. But we fully expect that this rally will fail and will bring about another round of selling. But it's not inevitable that it's beginning this week. We can spend the entire week consolidating off of those lows and retesting the highs before a bigger rollover coming in maybe in later July. When we take a look at our key intermarket observations, right now we remain distinctly bullish the U.S. dollar, both short-term and longer-term. At some point, we may change our stance once upside targets have been completed on the U.S. dollar, but right now that becomes a predominant trend. Really at this stage, that allows us to continue to remain long-term bearish commodities, but on the short-term, commodities will continue to consolidate, so we're still relatively neutral on them, chopping about here until they start breaking down. At that time we'll change our short-term bias. The U.S. bonds we're distinctly bullish, both short-term and long-term, and while stocks we remain relatively neutral, as we've not seen any of the U.S. stocks make any immediate breakdown moves. While we're at short-term, U.S. outlook will turn bearish as soon as we get a legitimate breakdown move. On the global stocks, though, we are embedded in a long-term perspective of bearishness, as almost every global indice is distinctly trending lower, and that a short-term stance will turn bearish as soon as we see when the broader selling comes in on the short term. That was your Monday Futures Market Outlook. Thank you for joining me.